Welcome to Training for HOA Boards, brought to you by HOA-USA. The subject of this video is budgets and financial reports. The board has certain financial responsibilities. Those include the adoption of the annual budget, collecting assessments and special assessments, a fiduciary responsibility to manage those accounts and to disperse funds, to distribute an association's income and expense statement as well as the balance sheet, to provide upon request of a lot owner a statement of account, to conduct an annual financial review or a compilation or an audit as required and according to GAAP or generally accepted accounting practices, and lastly to file the association's tax returns. The steps in developing the annual budget begin with starting early. 3 to 6 months is often plenty of time. Depends upon the complexity of the association and the amount of the budget. First of all, let's review the budget line items, including the expense history and contracts. Estimate the operating expenses for the next fiscal budget year. And then let's take a look at non-assessment revenues. Some associations actually make money and have revenues coming in. And some examples of that are revenues from clubhouse rental or fees from non-member use of amenities, the sale of timber rights, cell tower leases. There's lots of ways that many associations actually have revenue coming in. Next, we want to review the reserves for future major capital budget expenditures and develop a 5 to 10 year plan or budget estimate. We total up the operating expenses, we subtract out any offsetting revenues, and we come up with an annual operating budget. The next thing that we do is add in an amount that's going to be required for the reserve fund. A reserve study can assist the board in establishing reasonable reserves. Total up the operating budget and the reserve budget estimates. Let's divide this total budget among the number of residents to determine the annual assessment. And be sure to check your association's legal documents. There may be a restriction on the amount that annual dues can be increased, oftentimes 10%. Also be careful that the board does not fail in its responsibility to keep up with assessments. If they do not increase over the years and all of a sudden an increase is required of 15 to 20%, it may get locked in by those legal documents that may restrict it to 10%. Review the association documents regarding the annual meeting, the budget review process, the approval by members, and the notice of annual assessment and/or special assessments. Contracts. Contracts are going to be very important to you. And practically all associations do have contracts with vendors for services such as landscaping, management, pool maintenance, legal and accounting services, security, snow removal, garbage collection, and elevator maintenance. All of these contract negotiations should be done as part of the budget process. It protects the association by locking in the projected expenses and avoiding cost increases after the budget's been approved. Make a list of all the contracts, the length, and the renewal dates. Adjust the contract expiration and renewal dates, if necessary, to conform to the budget calendar. Consider bid processes, discounts for multi-year contracts, termination options, board and committee conflicts of interest, and in some states, disclosure requirements. Now, adoption of the budget. State laws and association governing documents will vary widely in this area. Be sure to consult with your management company or attorney. The ultimate responsibility in most states is for the board to prepare and adopt the budget. Now, the members must ratify the budget. However, the budget is considered ratified automatically unless a majority of total votes in the association, not just a majority of those present, reject the budget. Budget ratification does not need a quorum to be present. This covers the topic of budgets and financial reports. The next topic we'll take up will be collections, liens, and foreclosures.